Welcome to another edition of Better Informed. You may have heard in the news over the last week the words inverted yield curve and thought to yourself, well, what does that actually mean? It's something that's had markets spooked across the world in the last 7 days, and we've received a couple of questions from customers and followers about it. So I've got 4 questions that have come to me over the last few days. 1, what does the inverted yield curve actually mean? 2, does this mean there will be a recession in the US? Number 3, what does it mean for UAE property? And number 4, if I'm thinking of buying now, what should I do? So let's just run through those quickly. Firstly, what is an inverted yield curve? Possibly something you hadn't heard about until 6 or 7 days ago. Well, the inverted yield curve, simply put, relates to the yield or return an investor will get on a government bond. Under normal circumstances, you would expect a better return, a higher return on a long-term government bond than a short-term, because simply you're locking away your money for longer. An inverted yield curve means that the short-term yield, the short-term bond return, is higher than the long-term, and that's happened because investors have piled in to long-term bonds. Why? Well, again, simply put, it's because investors have been looking for a safe haven asset in uncertain times. And probably the 2 classic safe haven assets are number 1, gold, and number 2, long-term US government bonds. Now, why is that? Why is there uncertainty in the market at the moment? Well, a number of reasons, but probably the most pressing reason is the USA-China trade war that we've all been hearing about. So number 2, does this mean a recession? Well, economists will tell you that every recession in the last 40 years has seen an inverted yield curve as a precursor to the recession. But it doesn't mean that every time we've seen an inverted yield curve there has been a recession. There's been many blips, and I would hope that this is a blip. That said, I don't have a crystal ball, I can't see the future, and nobody can. What I would hope and what I would expect is that China and the US do come to an agreement, do come to an arrangement with regards to trade, and there are signs within the last 48 hours that is looking again more likely to be so, and markets have recovered somewhat off the back of that. So what does it mean for UAE property? Well, as I say, if it is a short-term blip, very little at all. However, growing uncertainty in the US actually may have a couple of positive impacts on us here in the UAE. Firstly, easing of monetary policy, a lowering of interest rates, and the Fed is more likely now as we go into September, October, which will mean in turn a lowering of interest rates here in the UAE. That's good for borrowers, that's good for the economy as a whole, as poor people have a little bit more money in their pocket. We may also see a slight softening of the dollar over the coming months with uncertainty in the US and potential lower interest rates. That again could be positive for us, as a lower dollar price, a lower dirham price is positive for inward investment into the UAE, particularly into property. So again, there could be some very positive news from us or impacts to us here in the UAE from it. What do you think? What should you do if you are thinking of buying? Well, very personal question. It really depends on you and your circumstances. What I would say is we have now seen 8 or 9 months of month-on-month growth in the number of buyers registering with us, showing an interest in looking to buy. That's both from investors, from domestic and international, and from end users. More and more people simply wake up to the value that can be found in UAE property here today. The next couple of months could see a slight fall in interest rates, which again would be a positive for buyers. But what I would say for those that think they may be waiting, a fall in interest rates and a fall in the dollar rather, is likely to bring more buyers back out and increase the competition that you face if you are out there looking to buy. What's my advice? Well, simply, if you are in a position to buy now, I'd be looking to buy now. There are some incredible deals out there, and I think buyers out there in today's market can find themselves some great bargains, and I wouldn't wait. I hope that's been of interest. I hope that's not been too leggy or too heavy on the economic side of things. Please join us again, and have a great day. Thank you. Bye-bye. You tried talking about this for 5 minutes without messing up.